What's up, guys? In my last video, I was explaining why 90 to 95% of traders failed. We went over all of the various reasons: lack of education, poor risk management, emotional trading, no consistent strategy, ignoring psychology, underestimating the costs, and then unrealistic expectations. In today's video, I'm going to go a bit more in depth on how to solve all these problems. And hopefully, this will end up helping people become consistent and profitable traders. Using these tools and using these understandings will eventually, if I had this back when I started learning how to trade, it would make things much, much easier and much faster for me to become a profitable trader. So without further ado, let's get started with the video. All right, so here are the main ways on how to avoid proper, essentially, mistakes that people make and how to eventually become a consistent and profitable trader. All right, so number one, it starts with the education. It starts with the education, the foundational understanding of what the heck we're doing, man. This is why it's so important to study before entering any market. You can't just go into something not knowing what you're doing. Oh, my friend said to get into this. Oh, I'm going to buy into this random penny stock. Oh, my friend said to get into this random crypto. You need to have a basic understanding of what you're doing before you actually try to jump in, right? So at the bare minimum, you need to understand what market you're getting into. If the market is options, you need to get into and understand what options trading is. You need to understand technical analysis. So charting is also very, very important. And for that, you need to be able to study using books or mentors or courses. All of the information is out there. You need to be able to look at all of this information. I have the information on my YouTube channel. It's all there. So education is the number one thing that will overcome many, many losses. Okay? Number two, proper risk management. It is so important to have proper risk management. At times, essentially, when we first start learning how to trade, when we first start entering the market, we throw 100% of our portfolio into every single trade. We throw the entire portfolio, 100%. If we have a $2,000, $3,000 portfolio, I'm putting $2,000, $3,000 into this random penny stock. I'm holding it. It never works out. How many times has that happened? You blew up your account. That's why having a 5 to 10% maximum percentage allocation into each trade is the way to do it. Okay? It allows you to be wrong. This is why it allows you to be wrong, and it allows you to let the numbers play in your favor. If you put 10% into every trade, and you also have a stop loss, that's amazing. You're able to basically you're able to minimize the losses on your account and maximize the number of trades that you're taking. And then eventually the numbers work in your favor. So, risking 5 to 10% while also maintaining a stop loss. If the price of a stock drops below this level here, I am selling. Having a stop loss is very, very important. Mixing that with 5 to 10% maximum percentage per trade is really, really important. And that is essentially the position sizing formula. You let money work in your favor. You let the trades work in your favor eventually. All right. Number three, you develop a tested strategy. There are tons of strategies that work in the market, but because we at first have not. So the thing is that when you're first starting to learn how to trade, you don't have any experience really feeling how it is to be in the thick of things. You don't really know how it feels to be a part of that strategy, right? Once it appears, you don't really know how to handle it properly. You don't know how to respond. You don't know how to have proper risk management. A lot of things just go out the door. That is why back testing before you're actually live trading is so important. Using a simulation account. Yes, you could use live data, but using a simulation account to see what works and what doesn't work before you actually use real money is really, really important. And many, many people do not do that. So definitely using a simulation account, back testing is very, very important. And then this is very, very overlooked. You need to journal your trades. You need to have a trading journal, and you need to be able to find out what works and what doesn't work. You need to jot out in detail the time you enter, the time you exit, the price you enter, the price you exit, the reasons why you entered, and the reasons why you exited in detail. You need to write all of these things out, and then you'll have a database of, okay, this works, this doesn't work. Maybe I should stop doing the things that don't work. Maybe I should only be doing the things that do work. That's why journaling your trades is really, really, really important. And this in and of itself can propel someone into a new stratosphere in terms of trading. If you have all of these other things down packed, being able to visually see what trades work and what doesn't in a Google Doc in front of you is a game changer. I'm telling you, it is a complete game changer. Being able to see this is absolutely phenomenal and very, very important. Number 4 is you need to master trader psychology. And you need to master your own psychology as a human, right? So basically, in the morning, there needs to be a set routine that you have. You need to either look at the market in the morning. You need to look at the news. You need to be able to chart the levels that showed up in the pre-market or the after hours from yesterday. You need to look at all the different stocks, see what movements are happening in the market, and have a built-in morning routine that you stick to, right? You need to have rules that you follow. So if you have a set maximum risk per trade, or if you have a stop loss, you need to set the rules and follow them. That is huge with mastering psychology. You need to have discipline. One of the most important things with psychology is simply just discipline. You need to have the discipline to do what's necessary, to do what is needed to do in that moment. You cannot accept, oh, wow, there should not be any room. Say, for example, you have a stop loss and the price is, rising, and you're like, okay, if it falls below this level, I'm going to sell. Say, for example, it starts to bottom out and it drops. You're like, oh, no, it's going to end up bouncing. I'm going to hold. I'm going to continue holding. And what ends up happening? It just keeps dropping. And then you beat yourself up. You're like, damn, why did I not just sell it as it broke the stop loss? That's because you didn't have discipline. Discipline is so important in your trading because it begs you, it requires you to have rules and actually follow them. That's why discipline is so important. And of course, you need to learn that losses are a part of the game. You need to accept the fact that losses are a part of the game. The best basketball players, the best athletes, Steph Curry, he's the best three-point shooter of all time. He does not make all of the three-point shots that he shoots. You cannot enter trading. You cannot enter this arena of trading and expect that every single trade that you take is going to end up working out. It doesn't work that way. You have to be okay with the fact that you're going to lose. Losses are a part of the game. You are not going to win every single trade. Losing trades is normal. That's okay. All right? So losses are a part of the game, guys. You need to accept the fact that it's okay to be wrong. This isn't a test. This isn't school. Literally, you are going to lose trades. The faster you realize that, not every trade is going to work out, you can live more relaxed. You can live more freely. That's essentially what is going on. And then last but not least, you need to have a long-term perspective. You need to have a long-term perspective in your trading, okay? You cannot expect to become rich overnight. You can't expect to just randomly start to make an exorbitant amount of money the first week, the first month. It doesn't happen that way. It's not normal to just randomly make so much money. There needs to be ebbs and flows in learning anything, even a video game, even any sport. Were you good at the sport when you first started? Absolutely not. You have to focus on the long term. You have to focus on compounding small wins, not hitting home runs. You have to be okay with base hits. You have to be okay with hitting consistent base hits, not home runs. So consistency, hitting base hits over and over and over again is much better than hitting one big home run, because the consistency actually builds you up as a good trader in the long run. Making a lot of money in the short term is not important. Okay. So building the resilience, building the character, the patience, and the discipline is very, very important. So I hope this makes sense. I hope you guys enjoyed the video. If you guys want access to all of my trades, my community of where I share all of my trades, my education, my resources, everything all in one, the link to join is down below. And I really, really hope to see you guys there. And I hope you enjoyed this video. Have an amazing day. Take care.